Welcome. We are back. Another day in the market. It's been a pretty sideways week. So I've been a little bit less active, just kind of really quick trades, in and out very quickly. You can see the range right here. We're looking at the Qs right now. It's been brutal. It's been brutal sideways, really. I mean, since the end of March, this whole entire month on the Qs, you've only had about a 2% range. We've had 5-6% days on the QQQ before, and so far this month we haven't even moved half of that pretty much. So very small volatility lately, at least compared to what we've seen in the last couple of years. And you're just chopping in this area. And why are you doing that? We're going to get back to that very soon. Okay, we're going to start off with crypto. I know crypto. We want to talk about stocks. Let's talk about crypto and other markets really quickly first, and then we are going to get to what is going on in the market. You've seen the title of the stream. I'm going to give you all the information I have on my chart based on my interpretations of whether or not this could be a top for the market here. So let's get started with Bitcoin, which it's been on a nice run, but it's in this upsloping channel, or it was in this upsloping channel, and now it's testing a breakdown. So next level of support could be down at 25K unless you can really easily or not easily, but in general, unless you can reclaim 28.7K. 25K is that next level. If we look at Ethereum, huge flush on Wednesday. If we were to draw a demand line, you can also see that is kind of breaking down right here, looking like a rising wedge and breaking down. Next major support at 1700. Resistance is around 2000. You can see this highs from last August. Moving on into bonds, you got the 10-year testing the 200-day moving average. This support zone right around 3.3 to 3.5% has held for quite some time now. If you wanted to draw out a pattern, I guess you could look at it like something like this. If we really zoom out, it just looks like a huge bull flag. I'm not going to lie here. And we've seen major patterns on the US 10-year chart before play out, especially during this uptrend that really started after the COVID crash. You saw this pattern break up. This was a flag that could have been looked at as a flag. Even this first move down could have been looked at as a flag, and now you might be creating a much larger flag. So if we go over to the weekly time frame for the 10-year and we zoom out here, you have two things to look at. One, are you potentially on the weekly flagging into a previous resistance for about a decade? That's number one. Number two, you also are showing hidden bullish divergence on both oscillators on the weekly. Very interesting. And if we also go back over to the daily, this is of course happening right around the 200-day moving average. So very big test for the 10-year here. Crude oil up next, rejected the 200-day moving average after running up to it from a previous breakout of that downsloping channel. Right now it's falling back into the 76 level. You can see it was a major low from last September, and not too far away from the 75-70-ish gap fill. Quick roll call. What's up, D? Your blind spot, Danny, Frank, Dave, the guy, and Strom in the chat. Yes, it is a late night stream. Strom, if you want to hop in voice in a little bit, feel free to do so. Just join the Champ Circle voice, and then just let me know in this YouTube chat that you're in it. And we could chat for a little bit, but if it's too late, I understand. I know I went live a little bit later, so just make sure you drop in the chat so I know you're in there, because I'm only looking at the YouTube chat right now if you want to. But gold breaking down from that rising wedge, really been going sideways ever since. Silver as well, breaking down from that, but just going sideways, nothing major there. Dollar currency index still looks like a major inverted cup and handle to me, but I guess as long as it's above really anywhere between 100 and 101.3, it's okay. It's kind of that zone right there. Make sure it's only on the daily chart. There you go. So this is like the make or break area for the dollar pretty much. And then final look at other markets, the Hang Seng Index. It's still making higher lows. So you've been making higher lows for about the past month. I guess as long as it continues to do that, it's okay. But the overall picture here is just kind of being in the middle of a range. All right. That is it for other markets. Let's talk about stocks. Make sure to hit the like button, hit the subscribe button, and join the Discord. The link is in the description. All right, let's get started with the S&P 500. We're looking at the SPY ETF. You can see these zones over here. You got this blue one, this blue one, this blue one, this blue one. This one is kind of the highlighted one. It's a little bit white. This is everything, in my opinion. We've talked about this on the stream before. This was your major support from April 2021 up until you broke it last May, pretty much exactly a year ago. And then since then, it's been used as resistance every single time it has tested that zone apart from last August, even though that was only a few weeks of going up to the 200-day moving average and falling back down. So if we're going to do the same thing we've done since last June for almost the past year, 1, 2, 3, 4, 5, 6, 7 times now, this is the top of the market. Until that trend breaks, that's just what it is. This is like the ceiling of the market. So I don't know if we're going to get sledgehammers or something out and just break the roof open, but for right now, this is what the roof, the ceiling, whatever you want to call it, the top of the market, it just is the top of the market for right now. I'm not saying it's always going to be the top of the market, but right now it has been the top of the market. So yeah, you can see we had a very nice rally from the beginning of March up until the last couple of days. Now we started to go sideways. We're pulling down a little bit. You have been closing slightly lower throughout the week. It still is somewhat just a little short-term range. We can take a look at that in lower time frames. Something like this. If we were to look at this as one whole range, it could just be really from this low up to this high. But yeah, this is a make or break range for the SPY. It's really that simple. There's not many other technicals to talk about apart from that. Volume's been pretty steady, pretty average, nothing too crazy there. I guess you are probably... Actually, no, you're not even at your upper Bollinger Band, so there could be more room for that move. There's no major signals in either direction on the daily, to be honest. If we get onto the 4 hour, you've been in this upsloping channel really since the end of March. If you chart it like this, which is basically using this candle low to this one to line them up with all of these ones from the past 2 weeks, then you are breaking down from that channel. If you want to use this wick instead, then you have not yet. All right, same thing on the 1 hour chart. Got the same look right over here. This just connects the most amount of lows in different ways. And based on this, you are testing a breakdown of this upsloping trend you've been in since the beginning of March after rejecting this zone right over here, right around 415, about 3 times in the past week. That dates back to some highs from the middle of February this year, as well as June of last year. So yeah, it's pretty simple. I mean, unless you're able to break above like 416-ish, then that's just your resistance. And this is your breakdown after rejecting that. You know, this eventually could turn into a flag and then you could go for it again. But for right now, you did get that rejection. You are testing this demand line breakdown. I am starting to go back towards the bearish side unless you break above 416. Then that would pretty much invalidate a lot of those bearish variables. You have some things. You've got hidden bullish divergence on the 1 hour. If we get onto the 30-minute, you could see this zone over here. I drew out a different type of wedge. And then on the 15-minute, again, on the low time frames, that's where we have some more variables. You've got the 1 hour hidden bullish divergence. You've got this broadening wedge on the 15-minute chart, potential classic bullish divergence heading into tomorrow. A very key level for tomorrow of support is 410. Lows from last Friday, lows from today, and then major resistance is up around 415, which is pretty much, like I said, the highs of the week so far. And that is the S&P 500. Moving over into the Qs. Very brutal range over here, but come on, like that's not really that surprising. I've had this zone charted out for a long time. You can see these lows from the past. You can see how that's acting as resistance right now. So where are we at? All right, you have classic bearish divergence on the daily. That is something you do not have on the S&P 500. You have it on the Qs. All right. You can also see that today's candle, if we delete all this for 1 second, today's daily candle looks very similar to this daily candle. Very similar formations, okay? You had a green day going into the day, then a very wide body candle that's red with upper and lower wicks. That's very similar to the April 4th candle. And what that did is basically it took you from this like upper range right over there into a lower range right over here, right? The overall price action here is just all of this range. but you have like these two small little ranges within it, where you spend a few days here, and then you did the same thing over here, and then you spent pretty much a full week over here. So I don't know if I'm looking too deep into this. This is just sideways price action. There's not too much you can say. But if you really want to zoom into the details, those are the details. All right. If we move over to the 4-hour chart, Max, I am glad that you are appreciating the education. Moving over to the 4-hour chart, you've got this upsloping wedge. You're testing that demand line right now. Very simple. Breaking above these highs would be bullish. Breaking under this white demand line would be bearish. The next level I have, that's a major level, is down around 297, which is about 6% lower if that does break down. That's just your next major one, because you can see all these previous highs over here. But even before that, you do have a couple of things pretty much right around over here. You've got this gap fill from the gap up on March 29th, and then you've also got a couple of highs from the beginning of February, pretty much. So that's really what's happening on the Qs. The 1 hour, you can see that range a little bit more, just something like this. So when you go range bound in the market, it's just, you're trying to use as many probabilities as you can to kind of predict which way the range is going to break. But all that matters is which way it breaks. So it's just more of a patient man's or a woman's game. And yeah, when the market's like this, I tend to be a little bit more relaxed, a little bit more hands-off. If I do trade, it'll be very small patterns on very low time frames with very small position sizes. And that's really all I've been doing. I'm just waiting until we get that next phase in the market. And for right now, it just looks like there's a little bit of indecision, and that's just been the story so far this month. On one hand, we had major technical breakouts. On the other hand, we still have a bunch of problems with the economy. But the market is forward looking. Someone will say something, another person will say another thing. Let's just see which way we break. All right. Moving into some other indices or ETFs, you got the ARK ETF, rejecting the 200-day moving average once again. This is another simple one. It just, on a lot of these charts, is coming down to which way do you break. Do you break under this blue zone, which you've held for the last year? That would be bearish. Or do you break out of this pattern, this wedge that you're starting to create, and break above the 200-day moving average? That would be bullish. And then finally, the Russell 2000 resistance is right around 180-ish. And then support, I guess you would look at it as that demand line. So a little bit of a bear flag starting to form here. We'll see which way it breaks. This will break up or down by the end of next week, most likely. So just being patient there. I mean, again, when you have consolidation like this, especially on a name like the Russell, it could lead to an explosive move once you break out. Think of it like a pressure cooker. It's like all this like steam is building, and then once you actually get the price action out of the prices that you're used to, it affects everything. It affects the people who are just trading on their phones off of numbers, not even looking at charts, or maybe not even looking at news, and they're just saying, okay, the Russell's been at 175 for this long, so I'm just going to wait until it goes higher or lower to buy or sell. And then there's going to be other people who are deep into options. They might be playing something like an iron condor, hoping for sideways or a different strategy that they choose to do. And once you break out of the price action that you're used to, you also have technical traders that might be trading that move. It creates this storm. So we do have consolidation. It is boring, but if you spend the time to really focus on the charts and be patient, you can position yourself with a good reward to risk, good risk management, and catch a good move. It's not going to happen to everyone, but to some people who have enough screen time, who wait for it long enough and position themselves correctly, it could be a really, really good move no matter which way it breaks out. So I'm less attracted to trying to day trade all of these ups and downs every single day and make 200% on ZRDTs. I'm more attracted to being that trader that can find that move and making a much crazier gain. Obviously easier said than done, but that's just how I look at markets when they start to go sideways like this. And a perfect example of all of this is the VIX. Okay, it's felt broken for months now. You've seen the market rally, even though this is kind of maintained around 18 despite that. What you've got over here, and Zeke did a good job of sharing this range. You're back at the bottom of this range. You've been in this range since 2020, and every single time you've come back down to these levels, you for the most part have bounced off of it, or pretty much every single time you have. And you've got this pretty decent wedge falling down into that support. You're testing a breakout of that wedge right now, and then you've also got some pretty major classic bullish divergence on the RSI. The MACD is also waning back towards green. You're at your lower Bollinger Band, so the VIX could get a pop here. It's a decent level. Had to sneeze. And yeah, if the VIX can get a reversal really above 15, which unless it breaks the trend of the last 3 years, it could see a very quick move. I mean, it's maybe even something similar to what happened right over here. Right, you were creating this wedge down into that support, and then boom, like you might have very slow consolidation down, but when you break out on the VIX sometimes, like look at the percent change on that move. That was a 68% move in what, like 4 days for the VIX. Those are the types of moves that are very beneficial if you can catch them at the right time. So we will see. And that's pretty much it for the market. The guy is saying harmonics on both SPY and Qs daily. Maybe looking at this, like a bearish shark or something. I don't know if this is what you're looking at. But there could be. Dave says, I need to try to have some usable cash for the day left when the bigger move comes. Most traders won't catch the bigger move, at least the initial move, right? So let's say SPY does this. Let's say this is the big move that happens. And I'm not saying this is going to happen in one candle, but something like that. Let's say that happens. Most traders will miss this part of it. But then if you get more continuation off it, I'm sure a decent amount of traders will be able to catch something like that. That's most likely not going to happen in 2 days. That would be what? I don't know. I think we've seen 6% in 2 days on the SPY before, but we will see. I mean, how much was this move? That was when around the time that Russia invaded Ukraine. Yeah, that was about 6% in 2 days. I'm not saying we're getting that, but I'm just saying with consolidation like this in a market that, at least for the past 2 or 3 years, historically has been very volatile, this consolidation could lead to the next big move. Probably will. We'll see. So let's talk about the swings real quick. First off, the newest one, Celsius, CELH. It is slightly in profit, up 1%. Testing a breakout of this wedge it's been in. It also has like this inverse head and shoulders look to it. The main level I want to see this hold is 83. Pretty important historical level. If we zoom out here, this could be looked at as like a cup and handle. I guess it's a fancy cup with like 2 handles. I don't know. But probably the hardest part here is breaking above the 200-day moving average. If you can do that, there's not much of any resistance until the first target. And then let's look at the other swings. Amazon, also slightly in profit, up about 1%. Testing a breakout of this zone that has been a very major area for reversals over the past few years. Next level of resistance is the 200-day moving average. The space swing, I know Tesla had a really, not Tesla, SpaceX had a really big launch this morning. But Virgin Galactic is up 4% since the entry. Nothing, that's a very simple trade, just a double bottom. Does it work? We'll see. GM, this was going for it. It just rejected the 200-day moving average. Now it's retesting the demand line. And that is pretty much it. I also want to take a look at some other names. AMD. We talked about this on the last stream. This is something I'm still keeping a very close eye on. You saw what happened the last 2 times that AMD had a hidden bullish divergence signal with a bull flag. I don't know if it's going to happen the 3rd time, but we will see. Yeah. It's been a very systematic move, right? You move up into your previous swing low or major previous support, and then you flag, then you move up into that next high, go up, kind of flip that previous high into support, go up, you flip this previous high into support. If this goes up again, it could test up to maybe $100. That's a very big historical level. We'll see, but it's getting towards the end of this wedge, so it's in a nice trend. This is a bullish pattern in a bullish trend. Looks good on the 4-hour hidden bullish divergence, almost confirmed there as well. I'd say the big level it has to hold is 89 for that to really take place, right? Look at that resistance flipped into support here. This resistance flipped into support here. Very, very interesting chart. And its brother, NVIDIA, I've got breaking down from this rising wedge. This has been a huge performer in 2023. Yeah, I've got it breaking down, but you know, it could maybe be redrawn to this. And there's other ways to look at it. This is just like the longer term pattern. If we go to shorter time frames, then it just kind of starts to turn into a range, just like a lot of other large caps. So then we'll just see which way that range breaks. But that is a video for right now. Tesla has not been doing so great. Down 10% today on the back of earnings. This was a swing I alerted in premium. It pretty much just went right up to that first target, and that was about it. So I'm going to delete just that first one for right now. Let's not do that. And let's talk about where it's at, right? When I alerted that swing, I was mainly looking at this inverse head and shoulders. I put that first target right at this level for a reason. I knew it was a major resistance. So I have to see so badly. Yeah, it topped out at that resistance. And now you're pretty much making a new confirmed lowest close since January. You have this level. I don't know if you've really fully given it up yet. Let me kind of draw this out really quickly. Pretty much that level. You close just about right at it. You can see this low, and then this low. But you're barely hanging on to it. If you can't get a reversal like right off this quickly, that gap fill sitting down at 146 is probably the next level. There's just really nothing until then. Maybe a couple of these highs back here from fall of 2020, which lines up with this daily low from January 26th. But those are your next two levels if that does break down. I mean, it's even got a little bit of a double top look to it. Just like that, lower high double top. And then this will be your neckline of that double top. So that is Tesla. If anybody has any taker requests, feel free to drop them in the chat right now. AI is back towards the bottom of this range, but this could be a bearish pennant breakdown, so that might give it a slightly higher probability of breaking down from this range. So we will see. I mean, if you look at it, the last 3 times it basically bounced off the bottom of the range. It got a decent move back up. This time it went halfway back up. These 2 times it went at least to the top of the range or even higher. This time it started to bounce, but it didn't really get that high. And now it's potentially breaking down from a bearish pennant back into the support. Not a great looking candle on the 4-hour, obviously. If this breaks down, you know, it could be rough because it's been in this range almost a whole year, minus January. Roblox is another name that's just been in ultra consolidation mode. Not Roblox, I'm sorry. Roku. It's been in ultra consolidation mode, right? It was towards the end of this triangle, and today it broke down. So this is one name that could start to continue flushing. I mean, just that trade alone today from like right when it broke this demand line to the low of day would have been insanely big on puts because they expire tomorrow. If it was weekly puts, that would have been a really good move. I don't know why I didn't look at this chart today, because I looked at this chart for the last few weeks waiting for a breakout or a breakdown, and I just didn't look at it today. Actually, really all I did today was this. And these are the types of trades I've been taking in this just sideways market. Let me see if I can find it here. No, it was a shooting star. Was it on the Qs or on the SPY? It was right over here. My only trade today was literally this. That was it. I saw this shooting star candle. I got into puts right over there when it closed. And then I took profits literally at the low of that candle. And that was it. So let's see if there's any other. I do see the taker requests. Any other names I want to mention? Fisker getting crushed, unfortunately. You know, it's trying to hold 450-ish. This is really not any big level though. Overall picture here is it's still in this massive wedge. It's not close to breaking out as of right now. You've got a potential for triple classic bullish divergence. You've got an oversold RSI. But that's really about it. Not seeing any harmonics here really either. I don't know. This just looks kind of weird, but let's see something. That's too weird. So yeah, I'm just waiting to see where this can develop a support. Until then, there's just not much to talk about. Obviously, I wish they would be doing better right now. I'm writing a 20-page paper on them as we speak, and that should be done in the next week. But all-time lows, from a chart standpoint, I can't sit here and lie. There's nothing great at the time, other than the oscillators. The oscillators are oversold. From a fundamental standpoint, I think a lot of people here know what my opinion is of Fisker under $5, but opinions are just opinions, so we will see. That's all I can really say. Let's talk about AMC testing $5. This is pretty important. You see this range, very historical area, and on lower time frames, might be a little wedge, something like that, into that range. You can see historically it has respected it. Not every single time it's tested it, but a decent amount of times. And on the 1 hour, you've got this classic bullish divergence plus wedge setup, testing a breakout. Let's see. All right. Let's go into these taker requests. I usually look at just the daily chart for tick requests, but I want to talk about end phase really quickly on the 1 hour chart just for shorter time frames. You've got 1 hour hidden bullish divergence and then a pretty textbook bull flag. So on the 1 hour, it's very interesting. Resistance is right around 230.6. Breaking that sets you up into a pretty interesting range historically. Guys, remember this level. Okay, let me actually just move this over to the daily, so you can see how big that is historically. Take a look at that. This is the top of your range on the 1 hour chart I just showed you, right? So this little 3-day pullback on the daily is what I just showed you on the 1 hour as a bull flag. And if we zoom out, the range that if you were to break out of this bull flag, you would fall into this range, or go up into this range, which historically is huge. Look at these highs over here from April of 2022, then all of these lows, then these recent highs. Very, very big level. There's not much I can say about MMAT. That was a very major support zone historically, and you broke it. I don't know if these are all-time lows, but it looks like it. They're getting crushed. There's probably something horrible fundamentally taking place. I don't know what it is, so I can't really say much. Palantir, there's two different ways you could look at this. If you want to take the larger approach, then you could just start your demand line over here, and then this is pretty much your symmetrical triangle. That is the first way you can look at this. The other way you can look at this is a bear flag. So, just depends. But this is very critical. You do not want to break that little area, because if you do, you're breaking that bear flag, you're breaking the 200-day moving average and that 794 historical level. So that would be pretty rough. Unity, it's in this is very similar to the last chart. It's in this larger symmetrical triangle, but you could look at it a little bit more short term and then see a smaller bear flag here, which it is already testing a breakdown. And it did just cross over to red on the MACD on the daily. Next up is Apple. Where's Apple at? Right here. Very, very strong. I was talking about this inverse head and shoulders when it was down over here breaking out. It's been pretty nice since then. I believe earnings are next week, so it's probably going to end up coming to that. Apart from that, I'd probably just watch this 4-hour demand line. You've been holding it since you broke out of that cup and handle. As long as you hold it, I guess it's okay, but once that breaks, maybe you drop back down to retest this green zone. And then obviously all of these highs up here could be used as next resistance. And then Microsoft. Well, first of all, this was an amazing swing. I believe this was in premium. And yeah, just chilling around the second target. Really, it's been consolidating at what was a very important area last year. Straw zone out. You can see, look at that gap over there. That is unfilled, I believe. This consolidation. So that's really the level that you've been hanging around. That's why that second target was right under it. And then the actual price action during that, just another channel, right? You could look at it like this. You can see these highs flipped into these lows. There's your channel, rectangle, whatever you want to call it on Microsoft. We'll see which way it breaks. All right. Just a reminder, it is in the pinned chat. All right, sale is going to be ending soon. 30% off every single plan, not just monthly, not just annual, also lifetime. 30% off. All you gotta do is use the code 30OFF at checkout. The link is right there, first link in the description for premium. Now, what is included with that? All right. You've got swing trades, options, a monthly webinar. This month's webinar is going to be on April 30th, most likely. Weekly watch list, the Bullseye bot, great chat as well. And then also very recently, we have announced Zeke as our next, I don't even know what word to use here. Zeke is the next. Fit in a word there, I can't think of it right now. Zeke is going to be helping me out. He's going to be sharing some of his option trades in chat. So if you watch the stream, Zeke does most of the timestamps, so you know who that is. He's been crushing in the Discord. So also not just my alerts, also Zeke's alerts. That's something very new. And all these things we've added recently, the webinars, Zeke's alerts, and a couple more new things coming soon. So if you want 30% off these plans, monthly typically is $64 for your first month, and then $59 every single month you renew. You get 30% off of that if you want to just do monthly. By the way, this is not just for your first month or your first annual. This 30% lasts forever, and obviously if it's lifetime, that'll be the only payment ever. Yeah, for annual, which is already 30% cheaper than the monthly. If you were to be in monthly for a year, you get another 30% off on top of that. And then for lifetime, which costs less than 2 years of annual, you get 30% off that. So you can see how it works, right? I want to reward the people who are staying in the longest. That's why it's built like that. And then you can get 30% off whichever one of those makes the most sense for you. Of course, lifetime does come with the one-on-one class. And there's only a few spots open that I'm going to be opening every month. I think we have about 3 or 4 lifetime members that sign up since I officially opened it. And then like another 4 from last year when I did like a private thing. So like 7 or 8 lifetime members, which is really cool. And yeah, if you want to join that exclusive club, it's right there, 30% off of that. Let's see what that comes down to. I'm doing the math very quickly.
Oh, I gotta get back for dinner.
I think that comes down to about just under $600, which is literally only $100 more than annual, right? So instead of even just getting annual for the 500, if you do lifetime with the code 30OFF, it's only $100 more, not even $100 more actually, than doing annual, and you get the one-on-one class, and it's not just 1 year. So of course, read all the disclaimers. But yeah, despite the bear market, despite all of everything that happened, about 75% of members signed up or still signed up, and that's always been the number for the most part. Roughly every single member that's ever signed up, about 3/4 of them are still in premium. That's a stat that I really like. It shows that people don't just sign up, see that it's some fake thing like a lot of other places, and then just leave. They're staying for a reason. There's value there. I'm not the best trader in the world, but I do try my best every single day, and it's not really just about how alerts are doing or this and that. To me, it's more about how can I help out with education and building a really good community that can help each other out, which has been a very key highlight during this consolidation, where I've not really been able to share much because there's not much happening, but the chat is amazing. Of course, the options have spoken for themselves. The quantity has been less, but I think we can all see what the quality looks like. I believe it's an 80% win rate in about the last 35 option trades. I did tweet that somewhere on my Twitter. Yeah, 80% win rate on the last 35. So there you go. 30% off, limited time only. These sales don't come off, and if you watch the streams frequently, you know that. There's different types of sales. This is pretty much the most extreme sale I ever do, which is where it's for all plans. So there you go. I'm trying to do a price point for everyone, and I don't like to do these long talks where people go into, oh, you could be buying this with instead of this. Use your money wherever you want. If you want to use your money to help support me and to get some education, do that. If you want to buy something else, I completely respect it. So that's my little promo. It's the pin chat and the first link in the description. Make sure to hit the like button, hit the subscribe button. Let's keep going with a few of these ticker requests. First off, we've got Matic. If anybody else has any ticker requests, drop them in the chat. I'm gonna look at it to... Should we look at the Tether? Okay, here's Matic USD. Let's just look at it to that. Another major triangle. It's really testing the demand line as we speak. This triangle is over a year old, and as we speak, it is testing the demand line. Some major levels. This is 125. You see this low, you see this high, you see these highs, and then a major level of support about 96 cents. Bunch of these different highs and then these lows. So those are your big levels there. Want to make sure Strom wasn't just sitting in a voice channel the whole time. Yeah, I'll be ending the stream soon regardless, but I want to start getting more guests on the stream, so it's just not me talking for the whole time. Sorry for all the confusion, Strom, earlier. But let's take a look at IIPR and then Walmart. Palantir bearish, said Max. We already looked at Palantir. I think there was the bear flag, but it's not broken down yet. It's really just you want to hold that little green thing I put right there. That's like the very big important level for Palantir. IIPR. This could be a bullish shark. Let me just go over to the weekly so I can draw it out quick. So let's see if this is a bullish shark right here. This is a bullish shark. All right, so on IIPR Innovative Industrial Properties, you've got a bullish shark that started during the COVID crash. You just hit the PCZ on the weekly time frame, so of course that could take a while. You've also got classic bullish divergence on the MACD, and then you've also got classic bullish divergence on the RSI. This is a level 66. You can see this low. We got to really zoom in here, but look at this weekly low, this weekly low, this weekly low, these two weekly lows, and this one. It's a pretty important weekly level, I would say so. So it's a very big test for IIPR right now on larger time frames. Obviously, shorter time frames, the trend is not your friend if you're bullish right now. So we will see. Walmart, a very interesting chart here. Okay, so the first thing I'm going to do on Walmart is supply line, demand line. All right, supply line, demand line. If you want a little infographic on what those are, go to the Discord. Links in the description. It's free to join. Go to the Quick Education channel and you can get explanation of what I mean when I say that. Here you go. On Walmart, since last April, for pretty much exactly a year, almost to the day, you've been in this symmetrical triangle, and as of the last week or so, you were testing a breakout of that symmetrical triangle. That's one way to view it. The other way, let's go over to the weekly right now. Let's get these off the weekly chart. Actually, I just took that off the daily. That was not the plan. Just like that. All right. The other way to view this is a range. Bottom of your range is right here. Top of your range is... The main top of your range is right over here. You know, this is more of just like an up thrust. But if you really just want to use extremes, you could do that. But getting towards the top of the range, it's a very big breakout test level for Walmart. All right. So that is Walmart. And that's pretty much it for ticker requests. One thing I also forgot to mention about the 30% off on premium, the webinars, right? Those are included. It's not paid webinars or anything. Not that there's anything wrong with those. I know of a lot of great people crushing it on paid webinars. I guess I'm not even gonna sound like I'm some amazing person. It's technically not free, obviously it's in premium, but for premium members it is free. So those are our monthly things. And you know, I do think that those are great opportunities, especially for new members, to meet everyone for the first time. So if you were to sign up today with the sale, in 10 days we have the webinar. You can get to hear me speak privately to premium members. You can say what's up to me, and meet some other members like literally just as soon as you join. Because if you were to wait another few weeks to join, then you have to wait until the end of next month for the next webinar. I just feel like it's a cool way. Like imagine you join a club, like a sports club or golf club. It's like the first day in, or at least like the first weekend, you get to meet everyone. I think it's pretty cool. So that is the pin chat. Strom, yeah, if you want to join, if you want to hop into the Discord, we could talk for a few minutes. I do see you there, so let me join up. Let's talk to Strom, one of the lifetime members in Premium, who just also joined Champs Circle, a little group I have with some other traders. And let's talk to him and see what's up. Let me just fix my audio.
Can you hear me?
Can you hear me?
I can.
I think it's good. I think we're good. All right, how's it going, Strom?
It's going pretty good.
How's the trading been lately?
Today was I didn't trade much. I had a pretty good day Wednesday. And so I swung a couple of calls, but they were SPY, and obviously we gapped down. So
Yeah. I mean, today was one of the larger selling sessions I've seen in the afternoon in a long time. It's pretty decent selling there.
Yeah.
Last 10 minutes, you got a nice bounce, though. Go ahead.
Yeah. No, sorry. Since I was listening in on the stream, that I got a little confused with it.
Okay.
Everything. But yeah. So, but overall, I everything's been pretty good. I think some of the more psychological things that I've had been working on of being patient and having better setups to get the better entries, and I've had those. And so I mean that's really just the key of how everything's been.
For me, that's the biggest improvement I've personally had in the last year. Yeah, because I learned all these trading tools, I got good at it, and then what I started to do was overtrade, because every single chart I saw I would want to trade, and that would just lead to a lot of more stress, and then it would affect my results. So really in the last year, I focused on taking less trades and being very, very picky with what I do decide to trade, and that's made a huge difference for me, not just financially, but also just like mentally, knowing that I only can trade what I feel is like the best setup, and I don't just take any random setup that has some variables. It's like that's been the biggest improvement for myself in the last year.
Yeah, and I can't restate that any better. That's exactly how everything's been going for me. Other than I guess swinging, when you're swinging something, you're kind of speculating because you really don't know what's going to happen overnight. I know I've heard you say plenty of times that plan on it going to zero if you're going to swing something. And I mean, I did have time on some of the calls that I had, so but yeah, going back to the speculation part, is I feel like that's actually been anything that I've done bad for trading lately is that I kind of didn't really have a good setup or anything like that. I just kind of thought, I don't know, like playing earnings or something would be like a speculation trade. You really have no idea how earnings are
Yep.
going to go. Um, that's so it's really, I don't know, a coin flip or whatever on how something can go. So yeah, I think I just need to cut those out completely, and I feel like I'll just be in the true zone of how I've been. And like my whole month has almost been green for trades. I mean, there's been some days that
Nice.
I haven't really traded, but
Yep.
it's been green except for basically one day. And then I actually
Great.
so on that today I started out red, but I did end green. But Tuesday was my real red day.
Okay.
Again, that's where I had some more speculating things, but I
Tuesday was
bounced back.
Tuesday was my only red day this week.
Yeah. So yeah, I let's see, I bounced back though and gained more than half of it back on Wednesday.
Nice.
So
Nice.
so yeah, but I'm still comfortably green, a lot more than what I had lost on Tuesday. So yeah. Um
Awesome. And what have you been thinking about like the market? Can you share your screen right now, by the way, or no? And obviously, like this is on live stream. It's up to you.
share
Yeah, like on
share my
Trading View
screen of
to like if you want to just run through what you're seeing.
um I mean, I literally had some of the same exact things that you're looking at.
Okay.
Let's see. Give me a second. Can you see it? I don't know if I'm sharing.
It's not sharing right now. Okay, it just started.
Okay. I mean, I don't think I have everything kept, but I was looking at the same thing on the cues, in the sense of, we're in this zone.
Yep.
Um, and I mean, I was looking at this could be potentially double top. Um, it could be a little bit more of a larger pattern on this out of here. I mean, I kind of think in the larger view we might have a larger cup and handle on how everything's working out, but I I don't know. That's kind of
I mean, yeah, it was making those
like,
lower lows and now it's starting to change into higher lows. So
yeah.
it's a cycle of a market. Like you can really look up like stock market cycle emotions, and like every time it's like you don't really typically get like a V shape where it's like straight down, straight up. You know, you need something very extreme for that, which was the COVID crash, right? You got a V shape recovery from the COVID crash, but more natural, at least somewhat more natural markets, you get that rounding action because it takes that time for sentiment to curve, pun intended, as you see on the chart.
Mhm. Yeah. So yeah, it's again, I think it's like you're saying, it's one of those phases where we do expect to go back. Um, like if this curve is like a good fit, that I expect we do bounce back down towards
Yep.
that area. I don't think you mentioned anything about the McClellan oscillator.
No, I have
I don't know
not.
if it's
Go
sharing.
ahead.
And I know Chetta likes to share this a lot in
Yep. I
the
see it on
trading
Twitter.
chat.
Yep.
We're hitting, so this is the daily. Are you able to see this? I'm not sure if I'm
Yes, I
sharing
do see
this.
it.
Okay. Yeah, so I got us, looks like we're hitting right at the 200 MA. I think we would actually be below it. I'm not completely familiar with stock charts, but I think the
Mm-hmm.
2.35 is where we ended. So we're about to cross zero. We did hit the upper Bollinger Band about the end of March,
Yep.
um, and then just cross the center of that. Um, so typically I would expect we start to at least touch the bottom part, maybe start to walk that.
Okay.
So I mean, but if we cross the zero, so we get in the negative territory, that's kind of where we start to see the whole market move down.
Yeah.
So
I mean, a lot of stuff is lining up for a big move. We'll see
yeah.
which way, but I mean, even if you look at the VIX, it's a major wedge, just like trying to break out of it right now. That's why I always try to look at other markets too, and not just the SPY and the QQQ. Like, you can get a lot of other signals from a lot of different charts about how the overall market does.
Yeah. So the kind of go into it, I don't have everything drawn out here for SPY, but I'm trying to, did I keep this for for IWM? No, but I did look at basically kind of the same thing of we're kind of in a pivotal spot here for this. I had looked at where we have this like bear flag kind of look. Maybe I think you probably draw it a little bit more like this. But this does kind of line up with next week, where if we kind of hit the top of that ascending triangle that you kind of showed with this, there's that pivot point around the 179, 180 area. We started getting the earnings a lot for some of the smaller caps in May. That's we can break out of this and go up, or we can.
And that move is probably going to be
think,
pretty nice. It's just waiting to see which way you go. And obviously, there's always a chance of a fake out, but that's why you manage your risk.
Yeah. So it's really I don't know. To me, it's kind of, however tomorrow plays out, could end up showing how we're going to be for the next week. But
yeah,
you never know, right? That's kind of how it seems. You showed on SPY the supply, or sorry, the demand line that we're at.
Yeah,
we're testing. We back tested it in the last hour. If we start to fall down tomorrow, then it kind of is an indication that we could continue that trend, but we don't really know. But it looks like, based on a lot of indicators like the McClellan oscillator, that we're due for a pullback. The VIX, like you said, we're due for a pullback. It's I don't know. We'll just have to see how it plays out.
Crazy enough, like next week, I think we have. I don't know if we have CPI, but I think we have an FOMC meeting next week, if I'm not mistaken. I think one of the earnings weeks it was lined up with, but major earnings, especially in the next 2 weeks. So, well, I see. Is that GDP? When is that?
Oh, so this has. That's Great Britain.
Oh,
I think.
okay.
GDP.
Yeah, I see that.
Let's see. We got consumer confidence next Tuesday.
Anything on Wednesday?
Because we normally don't. Durable good orders on Wednesday
at 2:00. No, I'm not seeing it.
And then, so yeah, Thursday.
Okay, so we do have GDP next week.
Yeah, GDP. You're right. 8:30
okay.
Thursday.
So GDP and then major earnings could be really what decides which way a lot of those patterns break in the market. If not, if we break before, it could intensify that move as well.
Yeah.
So huge week next week. I mean, I believe that the no volatility tight range in the market we've seen so far this month on the SPY and Qs should break in one direction within the next week, probably. And I'll be very excited to be on that move. Whichever one it is, that's what a trader does. Doesn't matter which way it goes, it just has to go some way, and you try to prepare for that. What's up, Corey, in the chat? Go ahead. So yeah, I mean, anything else you want to talk about?
Just I don't know. Go Rangers for anyone that's that watches hockey. Yeah, I mean.
Question: where do the Rangers play? Is it UBS?
Madison Square.
Oh, they play at MSG.
Yeah.
Okay, never mind about that.
But they played in Jersey at.
It's the Islanders that play in Long Island.
Yeah, but they play at the, I don't know if it's still called the Barclays Center, but
Let's see. I know nothing about hockey.
um
Oh, the Islanders are the ones that play at UBS actually, and Elmont. But yeah, go Rangers, I guess. I don't know if that's offending anyone, but I'm gonna stick with Strom on this one.
yeah, it is UPS. You're right.
Yeah. All right. Well, thank you very much, Strom, for the
Yeah,
help on the stream tonight. Everybody, go say what's up to Strom whenever you see him messaging in the Discord, and I hope you have a great night. Thank you very much.
yeah. Thanks, man. Take it easy.
You too. Bye. All right. Let's switch back to the other overlay. Go back over to Trading View. Let's volume up a little bit. And there we go. That's a lifetime premium member, Champ Circle member, amazing person in the Discord. Shout out to Strom. Thank you for joining in on the stream. And if any of you ever want to hop on the stream, just start sharing charts and stuff in the Discord, and I might reach out. So yeah, that's going to do it for tonight's stream. Just a couple of reminders. First off, if you haven't seen that wave of videos I put out last week, make sure you go check them out. New podcast, in person, Trading Addicts podcast, link in description. Vacation vlog, best picture ever taken in New York City vlog. I got the Polaroid camera right here, boom. And then of course, retail traders on Wall Street with Keanu Trades and Jordan. Really cool. Shout out to Peter Tuckman. 30% off in premium. Link is in the pin chat and the description. That comes with a monthly webinar included, swing trades, options, weekly watch list, bullseye bot, amazing chat, Zeke trades, alerts, and so much more coming soon. 30% off every single plan. If you put that onto the lifetime, it's literally only $100 more than annual. Lifetime is only $100 more than a 1-year plan. So I don't know, you do the math, but that is the pin chat. Thank you all for supporting the stream. I hope you have a great night. Good luck trading tomorrow if you do trade. If you don't want to trade, that's okay. So make sure you hit the like button and the subscribe button. Turn those notifications on so you'll miss the next stream, because sometimes Discord messes up, sometimes YouTube messes up. If you have both of them on, you should always know when I'm live. I know it's been a little bit random for a while, so I'm going to work on it. But as long as you have those notifications on, just pull up the stream whenever you see I'm live. That's all it is. All right. Have a good night. Thank you for watching, and peace out. Okay, I feel like that was way too like clickbaity, and like I just felt like a sellout, like with what I just said. I was too. That goes from marketing to like being annoying, and I apologize. That wasn't me. I take it back. But check out the links in the description.